Hey, bud.
Morning, bud.
How you doing?
Good.
Awesome. So I think today we're talking about how to handle the perfect intake call with a client.
Yeah. That first, from a lead to what do you do with that lead? How do you handle that first discussion?
Awesome. Yeah, I'm excited because I learned while working for you at Green Mortgage Team, this is probably the most important touch point, in my opinion, through the entire process.
Yeah.
So why don't you tell me a little bit about some of the details of like why it's important to have a good intake call?
Yeah. I mean, so first of all, I want to talk about a lead comes in and what do you do with that lead? Sometimes a lead is somebody that calls you. Sometimes a lead is somebody that emails you. Sometimes a lead is somebody that you are talking with at a party or something like that. And in my opinion, the first step is to set up a phone call. I think that a phone call is one of the most important things to do because if you're just emailing people, I find that people don't really treat you like a human. They treat you like a robot answering questions about rate.
Yeah.
And so I don't find that I ever really connect very well with a new lead coming in the door. So the first thing is always to establish a phone call. One of the things, probably the only thing I learned in college, maybe not the only thing, but one of the things I learned in college actually was on communication.
Yeah.
And this, I still am kind of boggled to this day that this is the stat, but this is the stat. 7% of your communication is your words. 48% or whatever. No, it can't be. It's 38% of your communication is your tone of voice and basically your voice. And then 55% of your communication is actually your body language, etc. So when you think about that contextually, it's like texting or emailing, 7% of your message gets across. Phone call, about 45% of your message gets across. In-person meeting, 100% of your message gets across. And so I always think of that and think, okay, well, sure. So in theory, then you think, well, Kyle, why don't you do every first meeting in person? Well, it's way less efficient. You can get way less meetings done. And I find that if you do phone calls, you can get 13 or 15 to 30 minute call can get you 90% of the way there. Get the information that you need, decide if it makes sense to work together, et cetera, which we'll talk about in a second. But I just want to make sure that we're not wasting time. For some reason, everybody that wants to meet in person, it's always like they think that if they meet you in person, somehow you'll convince them that, they'll convince you that their 400 beacon score is not a big deal and they have a really good excuse for it.
Yeah. Not to mention the client has to travel to where you're going, or you have to travel to where they're going. Like, it's huge. Time suck.
100%. Yeah. So if 15 to 30 minute phone call meeting, even if they came to you, it's still going to be 30 to 60 minutes meeting.
Yeah.
Like, that's just the length of time that typically happens. And so you start to look at like, okay, well, what's the, best use of your time? If you can do two calls in the same time that you do one meeting, you're not going to double the value of that customer with an in-person meeting, in my opinion.
Yeah.
So I think phone calls is the best. It's the best way of kind of managing your time and getting the maximum output from the minimum input, so to speak. And so first thing I want to do is establish a phone call right away. Great, let's get on a phone call. And then you can either ask, well, what's your availability and the best phone number to reach you at. I always like to be in control, by the way, of getting their phone number. If you don't have their phone number and you say, yeah, great, call me at this time, and then they don't call you, and then you follow up, and then you don't hear from them later, well, now you don't have their phone number, right? So immediately, great, can you do, and sometimes you want to be really specific, can you do tomorrow between 1 and 2 or 4 and 6? In fact, that's another sales technique as well, to establish that you're busy.
Yeah.
Even when I wasn't busy and I was brand new, I'm like, oh yeah, can you do this time or that time? My schedule was open, wide open, right?
Yeah.
But establishing that, like, here are the 2 times that I have available. Does one of those work for you? And if not, then obviously you open it up and say, okay, I can also do this time or that time. But I think right away it establishes that you're busy.
Yeah. That's a good tip. And I think too, like if you're getting leads from realtors, for example, often realtors just do an email introduction, or like, I'll pass your contact information to the client. And I always try to coach my realtor partners, hey, pass their contact information to me where possible.
Yep.
Because if I can hop on a call, the closing rate is significantly higher because, like you said, they don't really treat you like a human. They treat you like a robot or a commodity.
Yep.
And so if the realtor just does an email intro or just passes your contact information, truthfully, I've had almost 0% of those people call me back. It has to be, I get the contact information, I make the call, and then I close the deal.
Oh, 100%. Yeah. And that's a little sidebar, but it's a little bit of a trick too in meeting and going networking. I think we may have talked about this before, but not just handing a business card. I actually don't bring business cards ever anymore.
Yeah.
And then it's like, oh, shoot, totally forgot my business cards.
Let me get
your information, and then we'll connect, right?
Yeah.
Way better.
Yeah.
Way better. Do that.
And then the
every time.
follow-up text is what really, I think,
Yeah,
cinches it, right?
exactly. Another important key here too, lead comes in, you have to respond to that lead like as quickly as possible. And so if it's a phone call and you can't answer the phone call, just text them back really quickly. Say, hey, sorry, I'm on a call right now, or in a meeting right now. Can I call you back? Some people have actually gotten to the point where if they're in a meeting, they will answer the phone and say, sorry, I'm in a meeting right now. Can I call you back? There's pros and cons to that, obviously. But some people get into the habit of doing that. And then you know that if you're on a call with that person that, oh, right, when I called them, they said the same thing. They're in a meeting, but they're going to call me back. And then so it's okay that they do the same thing when you're in a meeting. And I'm not sure about the validity of how good that is. But for some people, if that's their stick, like I get back to people like immediately right away, you'll always reach me, then that could be a good way of establishing good communication lines. Perhaps even, especially as you're starting out. But I've seen some stats, and I don't know if it's like absolutely applicable to the mortgage business, but the speed of response, if you respond to that lead within about 5 minutes, your chances of closing that lead is like 4x, which is kind of crazy.
That is crazy.
So yeah, and that's with a lot of industries. That might be shorter sales cycle sales, for instance, but I actually think it's probably true. Like if you call out, I've had it before where somebody called me, left me a message. By the time that I got back to them a couple of hours later, like, oh, well, I didn't hear from you, so I called me back. I'm like, really? Like just a couple of hours? Like we worked together on a previous deal like a couple of years ago, and like I always responded very quickly, but I was just in a few meetings, and you can't believe you lost that deal because of that. So speed is really, really important. Now, if you're too busy to answer your phone or get to your emails, then you should probably have somebody in your team do it. So our phone line, it always goes to somebody, and we have somebody that always answers the phone whenever somebody calls. And then if Kyle's busy, then they just make sure that they find a time where they can fit in that's convenient for them. And same with emails. I have somebody that monitors my inbox too, because then the lead comes in, boom, they're getting responded to immediately. And I think that that's really important. The speed of response on sales in any business is one of the easiest things that you can do to improve your closing ratio. It also precludes any competitors from inadvertently entering into their ecosystem, because if you don't call them back within a little bit, they might also just call somebody else next. And by the time that you get back to them, now there's two people playing in the game. Whereas if you got back to them immediately, then you establish a really good working relationship, now there's trust. They probably won't even call a second person if they have a good intake call with you.
Totally. Yeah, because I think one of the big things that mortgage brokers are solving for their clients is uncertainty.
Yeah.
So if you have uncertainty and you let it linger too long, the client's just going to stress out, and they're going to do whatever they can to get some certainty, which is calling other people. So I would almost suggest in the mortgage industry, it's probably more so. Like that ratio might not even be accurate from that end. Like it might be more important to get on a call even faster.
It definitely could be, yeah. And 4x to me sounds really high, but at the same time too, when you start to think about that, think about how stressful getting a mortgage is.
Totally.
It's really stressful, and that's a good thing. I mean, if you haven't bought your own home yet as a mortgage broker, you probably should do it. Buy your own home when you can, obviously, but you go through that process and then remember how it feels and felt at different times of the process. That's what your client's feeling on the other end. And sometimes as a broker, we be doing things for 10 years and you haven't bought a home in 10 years, and then you go through the process. Oh my God, no wonder clients are power calling me at this stage and at that stage, because that's how I felt too. even with your own mortgage, there's still a level of uncertainty that the deal's going to get approved, and you did your own mortgage. You know, like you're pretty sure it's going to get approved. Like you see applications all the time. How do you deliver that certainty and comfort to your customers is really important.
Totally. Yeah, because I think we often forget that it's the biggest debt and the biggest asset someone will typically have ever gotten and will ever get in their entire life, for the first time anyway. And, you know, that's a pretty uncertain territory when mortgages are already a complex thing by themselves.
Yeah, 100%.
Yeah. So with this intake call, with this first call, can you walk me through like why it's so important? Like, what are the details in the intake call that you think mortgage brokers should always hit?
Yeah, so I think that if we talk about what the purpose of the call is, then we can start to figure out and fill in what the key components of that would be and why you would say certain things. So if we focus on like the purpose of the call, the first thing is to build trust with the customer. And that's why, again, you want to get on the phone. It allows you to establish more trust with the individual. And so all of what you're trying to do is build trust with them. It's really hard to build trust over an email. You know, it's really hard for you to establish that you know what you're talking about, that you have the answers and the solutions available for that customer. So you want to build trust with them. That's the primary purpose of that first call.
Sorry about that. Technology malfunctioned, and we're back.
We're back. Second purpose of the intake call is to just establish whether it makes sense to work together. I found that especially with what's going on with the renewal market, it may not actually make sense to start the process. Let's say that the customer doesn't want to refinance, and maybe you can get them a better interest rate. Well, if it's 0.1% better on a $300,000 mortgage, it's going to save them $300 a year. Let's say they want a 3-year term. It's like, would you like to go through the mortgage process to save $900? I think some of us might have a few clients that would, but I know most of my clients wouldn't. You know, when you start to actually break it down into the monetary amount, and I've had it before where sometimes in early in my career, I may have been more inclined to like say, I can give you a better rate, and the customer says, okay, great. And you start doing the process, and actually halfway through, when you get the approval, they're like, hey, so I was doing the math. So this is going to save me how much? $300 a year. They're like, huh. You know, and I think that it's important to just address that up front. Is like, does it make sense to work together? I occasionally have deals and clients where they're in a situation where I'm literally just helping them renew with their existing lender. I know that their bank's going to come back and beat me later. So why am I going to start the application now? I'll just send them an email and say, hey, send this to your lender and see if they match. And if they don't, then come back to me.
Totally.
You know, and the clients are very happy for that. And I think it's important to think about this on a renewal specifically. You know, you're trying to be in a position where you look at it and say, well, maybe we won't win this deal particularly right now, but you're trying to establish yourself to win future business. So that's all of that. A lot of that is specifically on the renewal side, but I think just even in general on a purchase side, does it make sense for us to be working together? Who else are you speaking with? And asking it that specific way. Who else are you speaking with? Not have you spoken to anybody else, but who else have you spoken to? Ensures that the client gives you generally a truthful answer. Sometimes even go a step further. Who else are you planning on speaking to? Right? That way you just can make sure that you've established who else they plan on talking to make sure that you've discussed that as well. Sometimes it just doesn't make sense to work together.
Totally.
Yeah. Next is wanting to pre-qualify the client. When you go through this, I like to make sure that we pre-qualify the client, understand what they're actually going to be able to qualify for. So you're starting off by asking them, what's the purpose? What are you trying to do? What is your objective? And making sure that when you talk about this, you can make sure that it actually is going to be you're like in the ballpark for what they want to qualify for. Because sometimes you have a client that comes in and says, I want to buy a property for $800,000, and they make $50,000 a year. Well, it's not happening. And I think that's important to tell them right away and pre-qualify that as much as possible. And one of the important parts about the pre-qualifications is trying to make sure that when you go through that, you can identify areas where they might not be perfect. Most most clients come into you and say, or assume that they're perfect and that they're going to qualify for what they want. And a lot of them are surprised when they don't. I like to use this actually as an opportunity to kind of knock down the client a peg or two and identify areas where they may not qualify. So, oh, by the way, I noticed that your credit isn't great, or oh, you're self-employed and you're not taking enough income home. So these are some challenges that you might not be able to shop like every lender. But I know lenders that will work with slightly lower credit scores, and I know lenders that will work with your self-employed status by being able to use this kind of income or that kind of income. So you're kind of right away identifying what challenges they might have, and they can't just walk in any bank and expect an approval for what they want, but also that you hold the keys and you have the keys to the solution, so that you're establishing yourself as the expert and the person that they should rely upon to get this done.
Totally.
Yeah. And then the last thing is really setting expectations. So now you've been able to set expectations, obviously on what they qualify for, making sure that, does this work? Making sure that that you've identified, okay, I think that you will qualify for what you want, or maybe that you don't qualify for what you want. Setting expectations on the interest rates and setting expectations on your process as well. If you don't have a process, you should probably have a process, but if you don't, it's fine. But I like to set expectations on the process. So for us, the customers don't talk to me again until they've supplied us with all the documents and we've done all the underwriting. So I prep the clients and say, so this is the next step. We have an online application. Once you fill in the online application, the system will prompt you to upload your documents. Once you've uploaded your documents and we've worked through the deal, usually it takes about 1 or 2 days for us to work on options for you. And then once we've figured out those options, then that's when you and I will talk again. On the application and documents, if you have any questions, my document managers are here to help you. And, I say that we're going to CC them on the emails and they can reach out to them regarding documents. And you're trying to actively kind of push the client away to say, don't call me about documents, please. That's not our process.
Yeah.
And I know a lot of brokers struggle with, even if when they start to hire their staff members, they don't actively tell the customer who to call for certain things. And so you do have to coach the client a little bit and tell them, this is our process. This is how we do things. Call this person if you want to talk about the documents. Call me if you want to talk about the rate, right? If they don't know, they're just going to call you for everything, because why not? But then you get on the call, and then if they call you and you answer the phone, they have a question, and then, I have some questions about the documents. Next thing you know, you're digging in and going through the documents when that's not your process. And frankly, if you have somebody that does documents in your office, you're probably also not the best person to be talking about documents anyways, right? I'm at the point now where I hope that my team knows more about the documents than I do, right? Especially the nitty gritty, like, will this lender accept this or that? And when it gets to that granular nature, my underwriter knows more than I do about that. And I don't want to know that information. My head only has enough space for certain things.
Yeah, which is a lot.
Yeah. The ego fills up way too much space as it is.
Yeah, I think even in saying that, even like the timelines for non experienced brokers or like junior brokers that don't have a team and stuff is super important. Being able to tell a client, hey, it's going to take me this many days to like review the documents or send to the lender or whatever the case is. Mm-hmm. I think even taking that skill from a scaled up team and bringing it to the new broker could be super important. Hey, this lender's taking this long, this lender's taking this long, and setting those expectations can be super helpful as well.
I agree. Yeah. There's certain lenders, like usually credit unions, for instance, that are slower, especially when they're very busy. And I think it's important then that you get them to decide, okay, I want this lender. Okay, great. Just so you know, their turnarounds are a little bit slower. We're quite positive that you do qualify with them, but they won't be able to pick up the file for about 2 weeks. Is that okay? And if it's not okay, then we do have another lender that's faster and they'll get it done in a shorter period of time. Often the follow-up question is, well, can we send it to the faster one and then also send it to the slower one? It's like, no.
Which is difficult too, because
how do you say that?
I've had that, and the client walked to the other lender that was slower themselves, and then ended up losing the deal right to that situation, which is really difficult.
There's lots of little things like that. We don't have enough time today to talk about all this client conversations and how to manage that process. It's really difficult, to do that. But usually what I would suggest is we're going to send it to the slower lender, and because that's the lower rate, and then we're going to wait for them to get the approval done. And in the meantime, if anything accelerates on your timeline that we need to push it somewhere faster, then we'll push it somewhere faster. Or if rates are moving up, then we'll send you out to the other lender just to hold that backup plan, just to make sure. Just in case the primary plan doesn't come through, then at least we have a backup that is established at maybe a slightly higher interest rate, but is in the door. And I think for especially new brokers, it's hard to set these expectations without knowing underwriting policies, knowing all of this information. And I think this is where, I and my team use Atlas on the first call to just go through it really quickly. Doesn't take very long to just punch in the income and liabilities and any properties they own, et cetera, and then just review all of your options and see, are you in the ballpark or not? There are some really quick versions of, it's 4 to 5 times your income. If it's insured and they're buying a $200,000 condo, for instance, then might be on the 4x of their income. Whereas if you're buying, the client makes a lot of money and they're buying a place over $1 million, probably more like 5x, especially if there's a basement suite or something like that. But I think especially when you have some moving parts and whatnot, it's really relevant. And to be honest, it helps to get even more dialed in on exactly whether it looks like they're going to qualify or not. And so, taking 30, 45 seconds or so to run the Atlas really helps just to see where are you at. And, these are the types of rates that you can qualify for, because clients often ask you, what kind of rate will I qualify for? Especially if you're not sure, if they're buying something with a basement suite, like, well, I don't know if you're going to qualify, for how much, but also what are the rates available for that how much, right? Because some lenders will qualify for more, but is the rate higher or not? So, yeah, I find that helps a lot, especially for newer brokers that don't know how to do the quick underwriting in their head, like somebody that's with more experience does. It really helps to establish that, and then you can set expectations on, yes, you can qualify for about this much, and also if they're asking about rate, what kind of rates can you get them to?
Totally. I think the next thing I wanted to chat about is scripting.
Oh, yes.
Yeah. Do you script? Do you not script? What do you do?
To script or not to script? That is the question. Happy Gilmore, remember that? No, it wasn't Happy Gilmore. It's Billy Madison. Sorry. I'm a huge slapstick early 90s fan. Anyways, so do I script? No, not today. However, when I first started, I did script, and I had a standard script. And now what I find is that it's actually, the script now is all little bits and pieces. And so I have all of these little things in my tool belt that I use at different times during the conversation. I do still have kind of a truncated little why use a mortgage broker, or what we do. And that's a little kind of spot, and that's probably the longest scripted part, if you will. And it sounds almost exactly the same every time. But there's all these little bits and pieces that you kind of throw at different times. So yes, I think when you start off, it's better to have a framework, but I wouldn't necessarily say write out your 2-minute script, because then it definitely sounds like you're reading something when you say that. But when you have little bits and pieces, you might want to have a checklist of some of the things that you want to make sure that you say on that call, right? So the part that I usually say, and this is kind of interesting, but I usually ask the client at some point, so have you used a mortgage broker before? Or if I knew that they did, because if they have an existing mortgage with First National, then I say, I can see you used a mortgage broker before. But if I ask the question, have you used a mortgage broker before? Regardless of what they say, my answer is actually the same, except it's just the little first bit. It's either, so you already know that we blank, or if they say they haven't worked with a broker, then I just jump into, okay, so this is what we do. And that answer is, or that script, if you will, for me anyways, is mortgage brokers work with about 40 different lenders to find you the best rate and best product, and then we get paid by the lender. So we're absolutely free to. The reason that we get paid by the lender is because we're a very efficient filtering system for the banks. So instead of them just having their branch channel and people walk into the branch, and a certain percentage of those clients actually qualify, and a large percentage of them may not. A percentage of those clients want what the bank has to offer, and a certain percentage of those clients do not. we're a filtering system. So about 90% of the deals that we send to our lenders actually funds, whereas at the branch channel, it's way lower. It's more like 30%. So we're a filtering system. We basically can, most banks that have brokering channels have 1 or 2 underwriting offices in Canada that do the same amount of mortgage volume as all of their branch network combined, but at a much lower cost. And they only pay the broker if the deal is successful and funds. So it's always it's also a lower risk model too. So that's why the banks have broker channels, and that's why they can offer us very competitive interest rates. Now, for a customer, one thing that I might throw in there at some point is also your bank may have a really competitive 5-year fixed, let's say. But what if the ideal product that fits you is a 3-year fixed or variable or something different? Often the banks just slide across what they have to offer, and this is what we have on special. And that's it. And they expect the client to take that. Our job is to figure out what's the ideal product for you first, and then see which lenders have the best rate for that product, and then work on getting that approval.
Gotcha.
Yeah. So the first part before the, which product makes the most sense, that's the primary script that I use, I guess, and every time. And there's little other bits and pieces too that I'll use. You may or may not want to use this one, but one I have used in the past is, and by the way, if you're working with a bank directly and the bank across the street drops their interest rates, do you think that your bank's going to tell you, hey, by the way, TD across the street just dropped the rates, you might want to go there? No. Not happening. Brokers, though, that's what we do, is we shop the deal. And the reason I don't always bring that up is because do you want the client shopping the deal the whole time, right? Because now you've coached them that like, oh, we're going to shop this deal all the way to the bitter end, right? And so you might not want to be bringing that up, because then it's just like active shopping the whole time.
Yeah.
And obviously, a broker's going to be looking out for their best interest, but yeah, you be careful with that one.
Yeah, it happens all the time where you get the deal approved, and then if rates drop, and the client's like, well, this other bank has this other rate, and then how do you manage that? Do you have any scripts on that part, or what do you typically say?
I mean, I have one that I just dealt with now. Oh. So I just so happened to be meeting with the VP with that lender. I had coffee this morning, and I asked her, what do we do in that? So, well, there's some pipeline protection, so there's something there that we can do. It's probably not going to come down all the way, but this deal's like at the finish line. It's like literally done. We just got the payout statement to refinance it. And the client said, oh, by the way, I just saw that this bank has a lower interest rate online. So the clients often just kind of assume that like if rates go down, that they're going down with every lender, but different lenders have different funding sources, et cetera, and they move at different times. So I think my conversation is going to be that we're going to, likely get a lower interest rate. I don't know if I'm going to be discussing whether that's because of the market dropping interest rates or not. Sometimes it is true that the market is dropping, and some lenders are just faster to get to the punch than others. So sometimes you just want to give it a couple of days and say, yeah, they dropped. I think the other lenders are going to drop in a couple of days, so let's just give it a few days to see. But I think overall I'm going to see if rates do drop in the next 2 days probably. And if they don't, then I think we probably see if the lender will drop the rate a little bit and maybe help us or match our buy down or something like that to get it to where we need it to be.
Yeah. I think there's something to be said about getting technical first principle knowledge too, because as you're describing this to me, the reason you're able to so fluently say that is you've dove deep into how pricing happens. Mm-hmm. And I think this is like probably an important piece too when it comes to these snippets and the scripts is you should probably learn some of the technical stuff. Another example is when I worked for you before, I would talk about offset and add to with rental policies, and I had mini scripts of like this is how an add to works versus an offset works, and it elevates you in position to your client.
Yep, big time, and that's part of the scripting when it comes to dealing with an investor client. So that's where a script is not. Do I script? No, but do I have all these little snippets? Absolutely, right? Because we have an investor client. Well, how do you add value to that investor client? There's a lot of different ways of doing that, but one of the ways of doing it is again kind of talking about how, okay, so some lenders don't use a lot of rental income, but some of them do, and I know which ones do. I hold the keys. It's the same thing, right? So trying to educate the customer on like there are different methods of calculating rental income. A lot of the major banks don't have a great method, but some of the credit unions and other lenders do have really good methods of calculating rental income. And this is what the difference is. So you're talking about an at income versus an offset. It's a big deal.
Gotcha.
Yeah.
I feel like this next question is similar to in sales when they're like, sell me this pencil. This is probably the mortgage broker's version. Client comes in, what's your best rate?
Yeah. Yeah. So back in almost jumped into the,
We'll save that.
yeah, exactly. All right. Well, I'll say this because it is kind of the script, but back in the day, I actually could just tell you what the best rate was that day because it didn't matter your profile. If you qualified, you got this rate. That was it. Nowadays, it's way more challenging and difficult. I actually have to understand more about your circumstances before I can provide a quote because there's different pools or different buckets that you fit into. So is it a residence or is it a rental? Are you buying under $1 million or over $1 million? Are you putting less than 20% down, putting more than 20% down, et cetera? All of these things are a factor. And then depending on how deep you want to go with the customer, if they're engaged with this conversation, then go another level deeper. So you can tell them the reason that the pricing is so sporadic, or not sporadic, but all split up now is because after the U.S. subprime crisis, what would end up happening is that the U.S. subprime crisis was primarily caused because they were selling bundles of mortgages and they're calling the whole bundle AAA because they had a few AAA sprinkled into it, but there was a whole bunch of C and B rated mortgages looped in there. And for some reason, the rating agencies still called it AAA and gave it the AAA stamp. So that's actually what caused the subprime crisis. Because all of a sudden the house of cards fell and they're like, wait a second, looking at these assets, these are not strong assets. These are weak assets in the bundle. So different bundles get pooled and bundled together. And a AAA mortgage is bundled with other AAA mortgages, and then a minus is bundled with other A minus bundles, and the pricing is correlated with that risk level. So it's very different. So if lenders bundle up mortgages, sell it to people like you and me, bundle them up, and then sell them out the back door. That's actually how most banks fund their mortgages. Then it's important to know how they can bundle up and sell these mortgages, and if they can get insurance on it, for instance. If it's an insured mortgage, then that's the lowest risk because it's backed by the Canadian government, and the borrower paid for that insurance premium. Then there's another bundle called insurable, which means the lender can still get insurance on it, but the borrower didn't pay for it, the bank did. So it's slightly less competitive on the pricing. However, it's still easier for a bank to sell those mortgages because it's insured by the Canadian government. And then the next step is conventional, which means it's uninsurable. So they can't get bulk insurance on it. And that's another tier higher. So I think, again, if you have a customer that is really, nerdy and wants to learn more about that, and because, we have a lot of investor clients, they like to get educated. That's part of our shtick, I guess. Then they like to get that information and absorb it. But a first-time home buyer may not. So you have to also speak to the right audience.
So I think one of the important things that you often do in your intake calls have a good set of notes.
Yeah.
Why don't you walk me through your note process? As much as I know them, I think it'd be useful information for other people.
Yeah, let's talk about it. Yeah, there's a lot of different things that we talk about. So now keep in mind too that part of the reason for having really good notes is a couple of reasons. Even if you're a one-man show or one-woman show, making sure you have really good notes helps, because then in the future you might have a deal that didn't go anywhere, and then 2 years later, and we have this all the time. Client goes dark. What they didn't want to buy 2 years ago, rates were too high. Now they're coming back. Oh, I heard rates are going down, and I want to get re-engaged again. And you can pull up their file and you can say, oh, great. So are you still doing this? Are you still doing that? And it makes it seem a lot more organized. And I know, Mike, you and I have kind of joked about this a little bit, that we have a different style for this. So with a first-time buyer, for instance, I might be more inclined to make it seem as though I just totally remember this off the top of my head, which I did not. because then I'm giving them some of that more like warm and fuzzies emotional, like, oh yeah, oh I remember. So you still working here? So they're like, oh, how'd you remember? Oh, I just have a great memory for my favorite people, but really I have a bunch of notes in front of me. And I know that you like the opposite, which is more, hey, I'm really organized and I'm going to take notes on our first call, and they know that you're taking the notes. And then when they call back, it's like, oh yeah, I have all of your detailed notes here. Like everything is detailed. And frankly, like I also would do that if it was more of an investor client or whatever too.
Which is what I do more of, the
more
business
of your
owner investor stuff anyway. So
yeah, showing that you're organized is like a good thing. It's like, oh, great.
Try to flip it into a positive.
Totally, right? So having notes is really important, because then coming back, you remember a lot of stuff, and it's important too to remember like the referral source and all this kind of stuff. So if I see a referral source and it's an investment group, and even if they're buying their primary residence, then it's going to be a little thing for me like, oh, by the way, I noticed that you came from this group. It sounds like you might be wanting to learn more about investing in real estate. Well, we can coach you and provide some input on how this first purchase can spin into whatever your future objectives or goals are, because setting up even your primary residence, that's often the hub of your investing strategy. And we can talk about different investing strategies, which is buying this residence, turning it into a rental, and buying another one soon. Or we can be looking at buying this one and getting a readvanceable product on this one to buy a separate rental if you want to stay in the home that you'd be buying. And again, you're adding a little more value that you wouldn't have otherwise been able to. And it's easier if you just can see what the referral source was and all these other things. So let's talk about like the core of it, what I'm looking for. And again, it's not always in this order. I find usually I'm asking questions at the beginning of the call, kind of jumping around a little bit and getting some details. And then at some point I need to fill in some blanks so we can like go through this. Usually they've given you enough information, and then they expect you to kind of take the reins and then just drive the bus home at that point. And that's usually where you go, okay, boom, 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 boom. But I need to know who the applicants are. Sometimes you ask this question and then you don't really realize that, like, oh, are you buying with anybody else is the question, because you're talking to one person usually in the first call. And who else is going to be involved in this transaction? Slight tangent. As soon as you find out there are other influencers in the deal, you want to make sure that the next call, when you talk about qualifications, you have those other decision makers on the call. So if you're talking to the wife right now and there's a husband, okay, great. So our next call, we'll get both of you on the call to go over the options, so that then you can make sure, because you'd be surprised how many deals you'll lose by not having both decision makers on board on that call. If parents are co-signing or providing a gift, then a lot of time I ask, the kids, do you want the parents, are the parents involved in this transaction? Do you want them to be on the call? Would that be good or not good? Right? But understand who the decision makers are. So it's not even just the applicants. I'm also trying to figure out, like, are there decision makers involved in this transaction? The purpose, that's a pretty important one too. Like, what are we trying to achieve? And I have this at the top of my list, because if I'm just trying to follow through and just, if the client's like, what do you want to know? Then the first thing I'm going to ask actually is, well, what are you looking at doing? And the reason that I start there is because I want to make sure that we're going on the emotional side first. What's the objective? What's the dream that we're trying to do? Nobody wants a mortgage, but they want a home, right? So let's talk about the home. Let's think about how cool it would be to get that. If it's a debt consolidation, let's talk about how cool it would be to get that, taking that monkey off the back, right? So talk about the purpose and what your intention is right off the bat. I think that's really important. Going to income. So, okay, what do you do for work? Dive into it as much as possible. And I think this is an area that you need to understand, whether you're self-employed or an employee. If you're self-employed, are you incorporator, sole proprietor, all that kind of stuff. One of the things that we do is we make sure that we're asking the questions, because this intake or discovery call, where you want to call it, is going to my document manager next. And they need to know what documents they're requesting. So most of my questions are obviously a high level of what the situation is, so I can pre-qualify them, set expectations, but also so that when it goes to the document manager, they know, okay, great, what documents are I asking for? If I just said they're self-employed, well, are we asking for the sole proprietor list or the incorporated list? It's two different lists, right? So understanding what their incomes are is really important. And if you need to dive into lots of questions, sometimes this section is like 10 minutes long.
Yeah.
Tell me more about this. Tell me more about that. Trying to identify how you might be able to get the deal done is really important.
Yeah, I find also in that in asking these questions, what I've noticed is sometimes if you just send the application, for example, they don't necessarily know how to fill in the application correctly because applications are a very rigid system, but you asking questions can be in a multitude of ways. And I've found that by going through this list and this intake format, you end up uncovering things that they might have left off the application, not on purpose, but they wouldn't have known how to fill it in.
That's true, actually. Yeah, because you're asking them, okay, where is your down payment coming from? And that didn't come up. And like, oh, right, I guess I should put that in the application, right? So you're in a way, you're making sure that they're more knowledgeable of what information needs to go into the application. Yeah. The other part too, which is a later step, is there's often mismatches between the initial phone call and the application, and then you have an app, and then your team or you are identifying, wait, you said this, but that is on the app. That's missed. You didn't put in the part-time job, or hey, I thought you said that you're working there for 2 years, but the application only says 2 months. Oh, well, that previous company was bought out by this new company, so it's the same employer. Realistically, it's just that it was bought out. Oh, well, that's pretty good information, right? So it's important to go through this properly. You can't skip the intake. You should never ever skip the intake and get the verbal of what the situation is before you jump into the application. And obviously people don't want to fill in and give you a bunch of information before they have talked to you first and have built enough trust with you, right? Properties, always got to talk about the properties that they own. Don't want a surprise where if you didn't ask and then all of a sudden, oh, well, that property, it has no mortgage on it, so it doesn't matter. It's like, oh, but you have property taxes and you have strata fees and you have all these other details. Maybe they have a rental that's paid off and they totally forgot about it. There's all these little nuances. So you want to make sure you understand what properties they have. And usually I'm asking, what property is it, owner occupied or a rental, value, mortgage amount? Do you have a home equity line of credit on it? Oh my gosh, the number of times that I've asked, do you have a mortgage on it? No. Okay. Do you have a HELOC? No. Okay. Sure enough, pull title. So what's this charge? Oh, I've got a line of credit. Like, it's the same. It's the same, right?
Well, also some lenders don't list it as a home equity line of credit on the bureau either. It's a personal line of credit.
Yeah.
And then that gets extra confusing.
Oh, it's super, it's super tough, right? So asking that question. If there's rental income, I'll ask the question. And I often like to, if you want to dial in the qualifications and like go through the atlas, then you want to ask them, what are your payments on your mortgage as well? Mm-hmm. And that way you can just really quickly say, yeah, you know what, you're in range to be able to qualify here.
Yeah. Or even like rent type, like, obviously we did a lot of rentals, but like, I don't know how many times we're on the call and they're telling me, hey, it's room by room rent, and it's like, well, now that's hard.
Yeah, totally. Well, that's and this takes a little bit more experience to know, because you don't want to. It's a fine balance between, like, the intake call shouldn't be an hour either, And I know internally, I mean, how many meetings have we had, Mike, internally, when you worked at Green Mortgage, where it's like the account manager wants to get on and off the call so they can make the next call. And the document manager is like, well, you have to ask a billion questions to make sure you identify any potential areas or issues. And it's like, it would take me forever to ask all these questions that don't make any sense. Often then it's like, it's an idea, it's a way of identifying when something doesn't quite make sense. So you said that your condo is worth $200,000, but you're getting $2,500 a month in rent in a market where it's usually $1,500. Is that furnished, or is that Airbnb and that's the average that you're getting, or what is that, right? Yeah. So it's that fine balance of like not asking a question that 99% of the time is irrelevant, but then knowing when something doesn't quite make sense, like, well, how about that? As an example, assets and down payment. If they make $50,000 a year and they've got $300,000 in the bank and they're like 23, it's like, the banks are going to ask you this question, and they're going to flag this for AML if you don't ask the question. It's like, so how did you come up with this cash? And every once in a while, you have somebody who's just like a crazy astute saver. I made a couple of really good investments that paid off. Like, well, good for you. But most people, it came from an inheritance, and then how long ago? We need to document that, et cetera. And then it opens up more questions and more documents that you have to be requested, right? So understanding the makes sense is important.
Yeah, it's difficult to get stuff like that on the application.
Oh, totally. They're just gonna put in the number, and if you just send the application in without an explanation of how that makes sense, then it's it's going to get flagged by the bank for sure. Credit, always ask about credit. Do they know about their credit score? Because some of these you're going through like, yeah, this is a great deal. All of a sudden, so how's your credit? Oh, 400. I think the last time I checked, it was 400. Is that good? Nope. Well, everything I just told you, not happening, right?
Sorry for pre-qualifying incorrectly.
Right? Yeah. And sometimes I've done that before where you start to jump into potential solutions and then you get to another question like, ooh, yeah, never mind, right? And then you got to like reverse. I do have a habit of doing that occasionally before I ask about credit because you just kind of assume that all of your clients have good credit scores and then all of a sudden, oh, crap. That's a pretty big car loan, you know? Yeah. And I always prep it too. I don't ask, do you have any other debts? I ask, do you have any other loans? So credit cards, student loans, car loans. And if they're a bit older, maybe I'd even ask them, have you co-signed for any debts? Because that's something that comes up. We're like, oh, I've co-signed for my kid's car, but it's not mine. And they pay it every month. Yeah, but that's still kind of hard to get removed. Yeah. So asking and kind of almost guiding them a little bit on that question helps them kind of think about what debts they might have. Because sometimes they don't think they have anything. Yeah.
And it's an opportunity, going back to the snippets, to bring certain things up. Like, your vehicle affects your borrowing power by this much. Mm-hmm. And so, like, going through these questions actually can elevate you to be even more professional for the client. Exactly.
And usually what we do is we tell them, we can give you two different options, one with paying off the car loan and one without it being paid off. And so sometimes I'm looking at it and doing some really quick math. It's much easier to do this with Atlas, actually, because it literally would kind of show you everything. But sometimes I'm just doing quick math in my head. I'm like, well, if you paid off the car loan versus not paying it off, sometimes the GDS TDS difference is enough to allow for the car to be there without any change there. But in many cases, I still use an opportunity anyways to tell the client, we're going to look at options for paying off the car loan and not paying it off, because the car loan of $600 a month is the equivalent of borrowing $100,000 in a mortgage. However, you might have enough room to still have the car loan on the books, but we're going to take a look at it, and I'm going to give you two different options, because you might be better putting less down payment and paying off the car loan. Your budget would thank you. And you might qualify for more that way. You might not. So we'll have to take a look at it, because maybe they're right on the cusp of being able to put 20% down. And by putting less down, now it's insured and now they're restricted on the debt servicing ratios, et cetera. So maybe they actually qualify for less. So you have to be mindful of the fact that you got to look at it, but clients appreciate when they have options.
Yeah. And you might open up more deals too. I don't know how many times a refinance has come out during a purchase transaction where it's like, well, we need to refinance first to make this happen.
Yeah.
And that wouldn't have come up until like later in the process. And then it's more challenging to close that refinance later on.
Setting expectations. And this is where if you ask, what's the mortgage balance? $200,000. Okay. What are your payments? $3,000 a month. Like, okay, right away. And then if you know that they're trying to buy a rental or whatever, it's like, well, we might need to consider refinancing the residence and restructuring that mortgage. What rate is it at? It's at 6% as well. Okay, well, I think there's two reasons now we should be looking at refinancing the residence, because A, you might actually save money by refinancing and getting out of the higher rate and getting to a lower rate. Number two, we might need to re-amortize that debt to bring the minimum payment down. You can still make extra lump sums and pay it off at the same pace if you want, but we need to get that minimum required payment down. So yeah, that's probably another conversation for another day, which is getting the surgical gloves on a deal and figuring out, okay, it's at 65 TDS. How do I get this down to 44? Right.
Yeah. Increase lifetime value of client.
Yeah, exactly. Yeah. Marital status. Sometimes we ask this question if we, know that they have kids or whatever, but it's a single person applying. It's like, so how did you have kids and you're single? I wouldn't ask that question specifically, but okay, what's your marital status is an important question, because you do not want to send in a deal. The client says that they're single, but it doesn't make sense because they've got a kid, and you never collected a separation agreement, and the bank maybe that you sent it into even has a profile already on them, like, hey, our profile says that they're separated and they have alimony or child support. Your application does not. What's the deal here, right?
Or it comes up on the T1.
That's usually where it comes up. Yeah.
I remember I had one where she was divorced a decade or two ago. I can't remember the number, but the husband disappeared, and they didn't have a full thing. We had to do like stat deck and a whole bunch of, it was really convoluted, but this was like after certain parts of the process were done, it became very hairy and tight timeline.
Wow.
But it ended up funding, but yeah, asking the question up front at the very start could have kind of circumvented a lot of that stuff.
Yeah. Crazy. And that happens. And yeah, you're right. Asking the right question at the right time. And I usually say, oh, I'm separated. Like, okay, I hate to dredge up this, but the bank's going to ask us for a separation agreement. Do you think you have that somewhere? You know? Yeah. That one's not fun. Realtor. So if they're getting pre-approved, who's the realtor? Often, you may have been referred this deal from the realtor, which is great. But if not, you ask them, who's your realtor that you're working with? And there's two reasons that you want to ask that question. Number one, you want to get that realtor's information and then ask them, so how do you like working with that realtor? Are they like a 10 out of 10? If they're not like, they're not great, then this is an opportunity for you to say, well, I do know a lot of good realtors in the area, based on the market that you're looking at. I have one or two really good realtors that if you want, I can do an introduction to, and you can decide if it makes sense to work together or not. But what's the best way to get business from realtors? Is to refer them business, right? So you're always trying to find ways of pushing business out to your network. Secondly, is you're trying to get connected with that realtor. So I often ask the client to send an introduction to me and the realtor. And a lot of the time the introduction is, hey, Joe, here's my mortgage broker. I just wanted to connect you two together. What are the chances that Joe is going to push their client to a different mortgage broker? Now they've got an introduction saying this is my mortgage broker. And then you get an opportunity to chime in. If you're a newer broker, I would highly recommend you probably make some time to just call and introduce yourself. Just a quick, like, hey, just want to say hi. Looks like we'll be working together. If you have any questions about anything, just reach out to me. Yeah. Just make a quick introduction. That makes a big difference because it's less likely that they're going to try to push that client away from you when the client has then sent them an email CCing you and saying, this is my mortgage broker.
Yeah. Right? And an opportunity to over-service that realtor and hopefully get another referral partner. So
exactly.
It's double duty.
There's so many reasons to do that. So it's always part of our intake is to get that information.
Yeah. I've been adding tax accountants and financial planners to that too, especially for, like, I'm moving my business to business owners and getting their accountant and their financial planner for the exact same reason as a realtor makes a huge difference.
Big time, to get that information. Quoted rates, if I quoted them rates, I want to make sure that I've let them know or put that into my file. Because you don't want to quote them a certain rate and then a month later they're like, oh, I found a place, what rates do I qualify for? And then you're telling them that the rate is higher. It's like, wait, because they might remember and you might not, right? So you got to make sure that you remember like what rates you quoted so you can always reference that back and understand that. And then the last section is more like a freehand notes section. So a lot of time that's like the strategy. So I'm often kind of positioning some notes for myself on what my thoughts are on that call. But hey, maybe it fits best with this lender or that lender because of this reason. I was thinking maybe this is the strategy. And often I'm also trying to position it so that my underwriter, when it goes to them, they're working through the deal and they can kind of review it and see, okay, good. You're not just underwriting it for like every lender, it's for one or two lenders. Or sometimes I put in there like, yeah, I ran the details. It only works in Atlas with Blue Shore Credit Union. So probably start there and see if the deal fits there. Mm-hmm. So like I'm kind of pointing my team in the right direction to save resources and time on that. And then that way they're not trying to go everywhere. Like, I can't get this deal to fit. It's like, well, did you try Blue Shore yet?
Or even planning stuff too, of like, they might want to move in 2 to 3 years. They're kind of iffy about this city or that city or whatever.
Yep.
I think that's a really crucial note section.
Yeah, I agree.
As someone that overused that.
Oh my God, you should have seen Mike's notes in there. My team was always so like, why does Mike write so many notes in there? He's got a huge, massive thing. And I'm just like, just ignore it. But also, I mean,
put it at the top. I think that was also the problem. I didn't put it at the bottom. I put it right at the top.
That's the issue. Because that's the order of like, you're talking and asking them about the strategy first, which is important for you, but it's not important for the rest of the team that's looking at the deal later. And then they're frustrated because they're like having to go through all the notes to see what's relevant and what's not, right? Whereas usually I would put in my notes like the first section would be like, this is what the team needs to know. And then the second section is like, and this is just for me, you know, but whatever. Yeah, it's all good. It's not like the information is bad to have. It's just that when you're passing the deal to somebody else, you want to be succinct and like, this is what you need to know.
Yeah.
Document manager, here's all the stuff. Like, it's not, you don't need all the fluff about the income and everything. It's more like, what documents are you requesting is what they need to know. And then the next, like what does the underwriting need to know to underwrite the deal? So you're trying to just like give them the information necessary. And then, more of like a just internal notes for the account manager. What do I need to remember when I talk to the client later?
Yeah, which I think is a really good future topic is what can you do to make other people more efficient so you're faster?
Yeah.
So I think we should put a pin in that and come back to it.
That'd be good. Yeah. You know what time it is?
Yes.
Lost your watch?
No watch.
Time for Back in the Day. All right. I alluded a little bit to this, but I want to talk a bit more about this. But back in the day, quoting rates was so much easier. It was not as difficult as it is now. So 2016 is when the insurable stuff started to come out, and that's obviously super confusing. It's still, still need to remind myself today, oh, is this deal insurable or not? And does it fit that box? But back in the day, they'd even have different rates for insured versus uninsured. It's literally all the same. That's because the risk level for these assets was viewed as the same. It didn't matter because that the international investors buying these bundles of mortgages didn't really care if it was backed by the Canadian government. And then when the whole house of cards fell apart, they're like, wait a second, we want more security here. And anything that was insured was backed by the Canadian government, which makes it easier to bundle up and sell those mortgages, right? So totally different, but literally back in the day, you could just look at a rate sheet and that was the rate. That was it. There was very few quick closes. And I'm going back to like 2007, 2008 type of timeframes here. But you didn't have to quote based on quick closes. A pre-approval got the same rate as a live deal. Like literally. Oh. Seriously, the same. Nice. Yeah, I know, right? That pricing was the same. Like literally everything was just the same. The rate was the rate. And as a mortgage broker at the time, banks still really used their posted rates to create some mystery about what the best rate was. And it was really easy to beat the banks on rates because it's like, oh, my bank offered me this, but they'd be expecting to go back and forth and do the negotiation and all that kind of stuff. And I think a lot of customers actually still think that that's the way it is today, which means that like a customer that doesn't want to do negotiations would often use a broker just for that particular reason. Like, and part of my pitch was like, I'm going to do the negotiations for you. Now, in today's world, that little snippet from my script isn't used as much because nowadays rates are way more online and way more just out there, right? But ultimately, I think that's one of the things that some of these you want to keep in your tool belt too. Is like, I'm going to do the negotiation for you. Customers are like, oh, great. I hate negotiating. It's perfect.
Hate talking to banks.
Exactly, right? let me do that for you.
Yeah.
Awesome. Well, hopefully everybody got some good value out of this and trying to get the perfect intake, all the things that you need to know. And hope everyone has an awesome day.